Hi everyone, hope you're all doing well. Today we're going to talk about the stock market and what's going on at the moment. Obviously you guys know the last 3 weeks have entered a bit more into a downtrend, and I thought it'd be a good time to kind of bring an update out and talk about what my feelings are at the moment with the stock market and what my game plan is. Obviously you guys know, when it's a bull market, it's very easy to come on, do YouTube videos, talk about, oh, I bought this stock's going up and so much. The really big testing times as an investor is to kind of step up into these the bear market, should I say. And in these I wish it was a bull market. And in these bear markets, what's the game plan? What you're going to do? And these bear markets are the opportunities. They are the opportunities where you get a lot of stocks at really low valuations. You can get it basically half the valuation of what it was a year ago, and those often can be the really big buying opportunities. The only problem is that when you do get the big buying opportunities, and after everything you've been told about buying in bear markets and being the best value and the best time to make money, people don't do it because it's that fear factor of, oh, we're going down, could we go lower, everything's negative, and people don't capitalize on them opportunities. Unfortunately, you don't get the opportunities without the negativity. It's very easy in 2020 to turn around and go, oh, I made so much money in 2020. You wouldn't have done that if you didn't have the confidence to buy in that dip, in that 2020 dip, and going, there's a pandemic going on, this could be really bad, the world's going to be shut down forever, without having, you've got to be looking going, yeah, it's going to be a tough couple of months, but actually this is probably going to be a good opportunity because a lot of these businesses are still going to be very much needed in the future, and you would have done really well from that. The difference is from this point of view, we're having a bit of a negative market, which is a lot longer, and it's, I would say, definitely a lot more painful, because the last time we had a major dip, like 2020, it was a horrible drop. It was 10% every day for a good couple of weeks. But what you had is a good run up out of that bear market, and it was pretty much over in a few months. This time we're going through a bear market, which is just the horrible chip away, it's 2 red days, and then you get that one green day, and then it goes back down the next 2 days, and it's just been a really big slog really since November time. And I've got to say, what's also a big thing is that the market as well at the moment, it's been the last 2 years in the stock market has been a really funny market. We've either had extreme fear, so basically since February, I would say even January and February. I don't know if any of you guys were in the stock market in 2020. I know there's a lot of new investors that came into the YouTube space, the retail space, watching my videos really. Even though I've been making YouTube videos since I'd say 6 years now. It wasn't really until 2020 when my channel actually got quite a bit of more exposure. Not that it's a big channel anyway right now, but a bit more exposure. So I think a lot of you guys might have come in, after the CV situation. But if any of you guys were in the stock market before that situation, 2019, pretty decent. Yeah, it was a pretty decent year. Going into 2020, January and February were really strong months. I remember everyone kind of at that point of view going, this is a bit strong here. And then we had the CV situation, it goes down, and then we have a crazy run into February 2021. And then within a few months' time, we come crashing down. We've had such a stock market recently, which is just so volatile. It's either extreme up or extreme down. It's not normal to see the market one end of the spectrum. It'd be weird to see when we kind of go back to a normal market, and it's just kind of slowly doing a thing. It ticks up, it slowly ticks down for a bit, it slowly ticks up. And there is volatility swings, but not as the opposite ends of what we're having right now, which is a thing that we're having at the moment, which I don't know how long this can continue for, but that's something that I've really noticed over the last 2 years. It's just been one end to the other end at the moment, which is tough to have such a crazy swing like that. But at the moment, we have the Nasdaq down 25%, we have the S&P down 15%, and this is actually going to be we are in track at the moment for the third worst year in 47 years. It's quite impressive when you look at that. When you actually look at that statistic there and you go, 47 years and it's the third worst market, it's a very tough situation. And the worst stock market, the only times we've had worse is 08, and I think it was 2001 or 2002, one of them. Those are the only times that it's been, a stock market that's been worse than what it is right now. And that's when you realise how bad things are. When you talk about, we're going through a bit of a tough time in the economy, we're having a little bit of a slowdown, we've got a little bit of inflation going on at the moment. There's definitely a few problems in the world right now that are affecting the economy. But then you put it into a factor of how much is that affecting the stock market, and there's a lot priced in at the moment. It's something that you can actually walk away from and say, in whenever it may be, 2023, 2024, 2025, at some point the stock market will go back to highs. There's no doubt about it. Companies will go back to good profit growth, good revenue growth, profit at all-time high, revenue at all-time high. The indexes will go back to an all-time high. All these concerns in the economy will be resolved or go away, and we will be at all-time highs. And when that point comes, it'll be a funny day. But when that point does come, you'll be able to walk away going, I've been through the third worst stock market in 47 years. It's quite a big badge of honor to go through. If you make it through this situation, I'm pretty sure any of a dip that you're kind of phased by in that time frame, whether it be like a 10% correction, if it's a dip over like a 6-month period, all them little dips in the future will probably not seem as big to you, because you'll be able to go through like a badge of honor of going, yeah, I survived this dip. And that's something also to be to put into context, like how bad this actual dip is. And also for you as an investor, fair play if you do make it through the other side, because there's going to be people, we're not really built for investors to go through one of the third worst dip in 47 years. We're not really. It's a hard thing to do. A lot of people will not make it. A lot of people will not be able to stomach, Nasdaq going down 25%, S&P down 50%. It was even worse at one point as well. We're kind of off the low still at the moment. Before that, we were actually even in a worse situation. And, as an investor, to stomach that, it's tricky. Even as an index holder, you'd be going, that's quite a big dip. But the thing is, as well, is like, if you're an individual stock picker, these are the indexes. So you're thinking about a lot of individual stocks. They've been absolutely killed more than that. So if you make it through that dip there, and you will have had stocks that are down, 40% or even more than that, it's hard to stomach as an investor. It's hard to see the percentage of your value that you've had in that investment go down by 40%. There's a lot of people that will have gone, right, that's it. I'm gone. I'm leaving this. But if you make it through the other side, fair play to you. But at the moment, because we are in this third worst year in 47 years, we have indexes down huge amounts. This has created massive sell-offs and massive valuations that are absolutely amazing. Valuations that are below now the CV times. We have valuations now that are historic lows basically. And the thing is, you look from 2020 to 2022, there's so many businesses that might be having some issues here. But the key thing is profit and revenue is massively up in the last 2 years. We look at PayPal. If you have a quick look at PayPal, if you ever have I'm going to put a screen up here from Ticker, and you'll be able to see that whatever metric you want to look at, if you want to look at a price to sales ratio, a EBITDA point of view, a cash flow point of view, a PE point of view, all of the metrics at the moment are the lowest that they have historically been at all, and especially in the last 2 years. There's a company like PayPal. We're not talking about a company that is high risk. We talk about a very stable company, a business that's worldwide, well known, good amounts of profit, historically great growth, future, got amazing future as well going forward. And it's the lowest valuation it's ever been at. And it's same for this sort of business. You look at this sort of business, profit and revenue is massively up. I can't remember exactly the numbers off the top of my head. I'll try to show a screenshot if I can find one. But like the revenue is over double what it was at previously in 2020. Double the growth. And you're looking at the profit as well. I can't remember the numbers off the top of my head, but I know the profit as well was massively up from 2020 numbers. So you got business that's massively better than where it was in 2020, and you got it sitting at valuations way below where it was, historic lows. You got so that's a value stock. You got Hims, a growth company. That company is now way moving into profitability. Potentially we see profitability in the back end of Q4. We've seen insane revenue growth, absolutely insane revenue growth. I've never seen a company like Hims that's putting in that growth and moving to profitability, and then it's sitting at such a low valuation. Same again, you look at the valuation on that point of view. I've never seen a growth stock valued like that before. Team 17, I made a video on this one yesterday. It's about 15-minute long. Quite a bit of hours of research put in. Always a bit gutting when you do on them sort of hours of research and then it comes like your worst viewed video out of the last 10. So if you haven't seen it, go watch it. But we're coming like Team 17. I talked about two stocks I own there, but Team 17 is a UK stock. Same again, you look at the business, The revenue is way up from where it was in 2020. The profit's way up from where it was in 2020. And the valuation's exactly the same as where it was. And it's just insane to see the queue of stocks like this. The massive opportunities out here. Valuations are so much cheaper. The businesses are way far ahead of where they were in 2020 and is valued lower. And in the short term, no one knows. No one knows what's going to happen. We were talking about it a few months ago. We were going on that downtrend into June. Everyone went, the market's going lower. What happens? We have a bit of a rally. Stocks, loads of stocks go up a crazy amount. From there, same again. No one knows if this rally is going to continue. We don't know if we're going to go flat. We're going to go lower. What happens? We go lower. And now you'll see that everyone's, going back negative on the market. And everyone's going, of course it's going to go low from here. We don't know. This might be the bottom. We might be having a little bit of a callback. We might go in a run. We might flatline here for the next 6 months. We might go even lower and go to new lows. We don't know. No one knows in the short term what's going to happen. But if you're a long-term investor, the short term doesn't matter. If you're a long-term investor, this is now your opportunity. And that's what I am. I'm a long-term investor. I'm looking at these opportunities right now, what's going on. And for me, I know if I see quality businesses that are performing absolutely fundamentally amazing, you're looking at profit and revenue, they're on the uptrend, they're way higher than where they were in 2020, they continue to grow, the valuations are at historical lows. I'll tell you something, as a long-term investor, no one knows what's going to happen in the short term, but a long-term investor, you should be seizing these opportunities. It is unbelievable to see the opportunities out there. The valuations that a lot of these companies are trading at are unbelievable at the moment. And as a long-term investor, this is one of the greatest buying opportunities that we're probably going to have. I think this probably will be the best opportunity as a long-term investor that I will probably ever see. So for me, this is probably one of the opportunities for me to create really good wealth. I thought 2020 was a fantastic opportunity. I tried to buy as much as I can in 2020. I got the rewards. I've sold some off. Took some profit off the table. I've done well. The crazy thing now is to see that we've gone from the run out of the 2020 dip now to a point where most of the stocks are back at the 2020 situation without the CV concern, without a pandemic concern, and even some of them have gone even lower. And for some of them, because they are kind of the same sort of market cap, but the profit and revenue has grown so much, the valuations are even lower than 2020. So I look at 2020 as like a major opportunity where I made money from, and I thought I wouldn't see anything like that. And I'm looking at the stock market at the moment, and I've got the same opportunity once again, and I'm just going to try capitalize that as a long-term investor, because I think there's going to be a lot of stocks here that I will be able to buy at insane low, valuations that I probably won't ever see again, create very good wealth in the next few years. Potentially even pick some dividend stocks up that are performing absolutely amazing. I'll be getting dividend stocks that, normally holding, 3% dividend yields that are now currently up at 6% dividend yields because the share price is over-halved, and there's just insane opportunities out like that. So for me, the plan is reinvest cash built up. So you guys know in the last few months, last kind of 1 month, 2 months, I actually started selling a few stocks. So we had a bit of a rally just because we went up a little bit quick. Had a bit of cash on the table. I sold a few stocks for, not all the stocks, but I had little trims like in mode, for example, Celsius. I sold Mercado Libre before buying back in, for example. And also through the last kind of couple of months, I've been a bit slower buying as well. So I've kind of built that cash pile up through slowing down the buy-in and also a couple of trims. So the first thing is I'm going to reinvest all of that cash straight back into the market and buy opportunities. So that's worked out quite well, that I managed to slow my buying down at a good time. I trimmed the market, trimmed some positions when we had a bit of a rally in the market, and now it's time to reinvest that back in. So the big thing is reinvest where possible of what I've kind of slowed down or profit I've taken. Next thing is pull money from where possible. Like I said, for me, this is kind of like a CV situation now. I personally, for me, I can't see why I'd want to have a cash balance. Right now for me, the reason why you have cash balances is to buy the dip. Now, at the moment we have the dip. We have a dip so big that we have stocks at the lowest valuations that they're ever going to be at. And they might go lower. And I'll have to just keep pulling cash in where possible to kind of buy the dip. But at the moment, I'm not going to chance that stocks from now go 10% lower or 20% lower. I might as well just start buying. And every time I get cash in, I'm going to be buying. And that's what I'm doing at the moment. And while these stocks are down here, I need to be having as much cash available where possible to be buying the dip. So for me personally, I've been trying to make sure that I maximize my cash coming in to my broker's account. That means I've been trying to cut down on certain things, things that I enjoy or things that might be a bit of a kind of treat potentially. I've been trying to cut down on any kind of expenses that I don't need to be making, so I have more money going into my broker's account every month. I've been trying to maximize my income, so I've been doing extra work where possible, looking at opportunities where possible to kind of create more money to be buying stocks. Another example for me personally is, apart from last month because I couldn't, but the previous months, I've been doing about 6 hours overtime at work, and that's obviously generating, even more income where I can personally go and buy some more stocks. So that's other opportunities that I've been taking. So been keeping expenses personally for me down to a low, maximize my income where possible so I can buy them opportunities, as I believe I will get the rewards in the next few years. And also focusing on buying the big deals where possible. You'll see me right now, I am very much not buying any kind of rare speculative opportunity here. I'm not buying many stocks that have an unproven track record. You'll see me here at the moment really focusing on quality stocks that, for example, PayPal. I don't think PayPal has ever lost over 50%. I think it's even down more than that, but I can't remember without looking. I've never seen PayPal have a 50% drop. And that's an example of a stock that I'm like, this probably won't ever happen to PayPal again. And it's an amazing opportunity. Historic valuations for a company that has such a good track record will have, a great future. I've got to focus on buying these big deals, the big deals that probably won't happen again. I remember Facebook about a year ago, maybe a year and a half ago, Facebook was like in the $300 range, and I remember people asking me quite a bit, and they're like, "Oh, potentially could I buy Facebook at 280? Maybe should I buy Facebook at like? Do you reckon it'll get to 250?" And now Facebook's in the $100 range, and it's like them opportunities, like you would not believe they would have happened. Those are the opportunities I'm really trying to focus on, the really rare opportunities that I can pick up. And that's what I'm buying most at the moment, which you'll probably notice. So yeah, that's my plan at the moment and my views on the stock market crash at the moment going on. Hope you enjoyed the video. Hit the like button if you're new, subscribe, and I'll see you in the next one.